The latest USDA crop progress report continues to show favorable conditions across much of the country. When it comes to corn, 68% of the crop is rated good to excellent. As for soybeans, USDA says 65% of the crop is good to excellent, and as a whole, 91% of the crop is in the fill stage, which is 8% above average. Spring wheat continues to exceed estimates too. DTN Grain Analyst Todd Hultman has an opinion on all things crops. He's our market analyst this week and tells us some of his major takeaways from the report.
Well, of course, USDA's estimated a record corn yield, and that might have, or I should say that's under debate right now as we continue to look at the field and the crops. And we've also had a digital survey here at DTN, which suggests maybe a slightly lower yield than what USDA said, but we'll continue to talk about that as the months progress. But overall, it set us off on a bearish course in corn. 14.6 billion bushel crop is another nice big crop this year if that comes true. And it seems reasonable that we've had good weather. We've had good adequate moisture across most of the Midwest. And here in August especially, the temperatures have been nice and moderate. On the soybean side, they estimated another record soybean harvest, 4.6 billion bushels. And remember, that comes on the heels of a record soybean harvest that we had earlier this year from Brazil. So soybean supplies are not seen as a problem right now.
What are your thoughts on global wheat production and how that may impact U.S. farmers going forward?
Yeah, wheat's been a very interesting market this year, and that's something I haven't said for a long time, Troy. We started out with really, of course, we had our concerns here in the Southwest Plains over the winter. It was dry and we had drought developed. But there's always, we've had situations before where we can have a drought here in the Southwest Plains and the rest of the world grows a lot of wheat. Well, this year it seemed like one by one we started hearing about a problem after another problem. It started with southern Russia, and we hear Australia's dry. Last month we started to hear more about Europe being dry. And even now in the northwestern U.S., we've got areas of drought and concern in the Canadian Western Prairie that maybe production will be down a little bit. So this scenario of lower world wheat production has kind of grown gradually throughout the year. And right now USDA is looking at about a 4% drop from world production of a year ago. International Grain Council, which is out of the UK, actually expects a 5% drop. So this is a significant drop in our wheat supply outlook, and I think that's one thing that's been helping wheat prices just up until about a week ago.
So really strong corn crop again this season, maybe a little background on how that's going to affect farmers going forward.
Yes, well, from now until harvest time, you know, the seasonal low for corn prices typically comes in early October. And as long as we have a big corn harvest, as it looks like we're going to have, whether it's 14.6 or 14.5, is really not going to change the outlook for that. We're going to have bearish pressure because we also have a 2 billion bushel carry from the previous season that we have to remember. So we're going to have plenty of corn supplies available this fall. And we expect our typical seasonal low that we normally see probably early October. From that point on, corn should see a better demand season from world exports this year. And part of that's thanks to the drought that we had in Argentina earlier this year. And then Brazil's corn crop has also been down earlier this year due to concerns about dry weather. So this is one time when USDA is expecting lower ending world stocks at the end of the 2018-19 season, and that should translate into better export opportunities for the U.S.
All right, so corn's in good shape for the U.S. Looks like soybeans, pretty good shape for them as well. Thoughts on that?
Yeah, soybean supplies are in good shape. The question is, what's soybean demand going to be? And that's something where it's just almost impossible to guess in this political environment. Even as we speak, Chinese and U.S. officials are meeting in Washington and seeing if they can hammer out any progress on this trade dispute that's been going on, and of course has resulted in a 25% tariff against our U.S. soybeans. That obviously remains a bearish concern and has probably knocked our U.S. soybean price down at least $1.20 a bushel, if not more, simply because of that tariff. Now, moving forward, I think it's very tough to predict where these trade policy changes are going to go. Is there going to be a resolution anytime soon? Will we be able to get back in China's good graces at some point? That remains a question to be seen. And typically, China's most vulnerable time of needing U.S. soybeans is October to February. So we're getting close to that period, and it's going to be very interesting to see just if the trade dispute continues, how little of U.S. soybeans can they get by with through that time period? Or will they just basically have to deal with the tariff and move through it? I don't think anyone has a good answer for these questions yet, and without that, it's very hard to estimate what our demand scenario is going to be. So right now, the USDA is estimating an ending stocks of soybeans in the new crop season of about 780 million bushels. Well, that could be plus or minus 200 or 300 million just on how that demand outlook goes.
If you were in that meeting with the Chinese officials, what's the one thing you'd want to know?
Well, I think I would emphasize that the U.S. needs you as a good customer just as much as you need our soybeans for your importers, and that tariff is really hurting both sides. So let's look at a different way of talking about our differences. I think that's where I would try to steer it.
All right, and fall's coming up just a few weeks away. Any more predictions as we get closer to fall?
Well, unfortunately, the weather is so good, it's hard to argue with USDA's crop estimates right now. And as long as those big harvests are impending upon us, it's very tough to find any buyers who want to run right in there and get in front of this freight train. So I think, as typically we are this time of year, we're going to have to endure through this low price period. But the demand on the other side should look a little better.